The stock market's beating fast. IPO's in sight. But one silent guardian steps into the limelight. It holds your shares, your ETFs, your dreams. Now, it wants a slice of your investing memes. Yes, NSDL, the National Securities Depository Limited, is finally going public. In India, there are two depository participants, CDSL and NSDL. And if you've ever owned a share in your life, well, chances are NSDL has been holding it quietly for you all along. So let's decode the IPO that isn't loud, but could be some loud money. I mean, you've heard of brokers, you've heard of exchanges, but who is the final custodian of your shares? Answer: NSDL/CDSL. Not your broker, not Zerodha, not Grow. They are just interfaces. NSDL/CDSL is the vault, the digital dabba. And now the vault is opening its doors to public investors. A rare event, and possibly a wealthy one. Just to give you a business history and background, it was founded in 1996, India's first and the largest depository. 3.3 crore plus Demat accounts. Assets under custody, 447 lakh crores. 447 lakh crores. The clients include mutual funds, FPIs, listed companies. But here's the kicker. This is a business with a deep moat, highly regulated, enormous trust capital, tech, which is the backbone of India's capital markets, and there are just two players, NSDL and CDSL. CDSL is already listed. Yes, it's a duopoly. You can't enter the game unless SEBI dreams about you. While most businesses fight for market share, these just two, they're just sitting on it. Just sitting on it. IPO price is around 4,500 crores and it is an exclusive offer for sale. Understand, it's just an offer for sale. So nothing will come to the company. The entire proceeds are an offer for sale. The selling shareholders get the entire piece. No fresh issue. The existing investors are offloading it. IDBI, NSE, HDFC Bank, etc. So this is not a fundraising round. This is a liquidity round. Liquidity round in the sense that institutions are exiting and the public is getting into it. They build the vault, now handing you the keys. Will you turn the lock or let it freeze? The fiscal year 2023 revenues, 1,099 crores. Fiscal year 2023 net profits, 234 crores, giving you a net margins of 21.3%, return on equity of almost 20%, 3-year PAT CAGR of around 11%. And where are the revenue drivers and where do the revenues actually come from? From issuers of the annual fees, from transaction and settlement fees, from custody charges, from add-ons like e-voting, e-KYC and digital signature services. This is annuity style income, recurring, low cost and completely regulatory backed. No factories, no inventory, no bad loan, just data, trust and quietly compounding zones. I mean, sample this. During 2020 COVID, there were around 4 crore Demat accounts in India. That number crossed almost 17 crores in 2025. 17 crores. And assuming there could be duplicate Demat accounts also. For example, I have multiple Demat accounts. My wife has multiple Demat accounts. And the companies would have their Demat accounts. Individuals would have their own Demat accounts. Okay. Now, assuming, let's discount the duplicate part also. Suppose there are, say, 13, 14 crore individual accounts. See the growth as India becomes more, equity savvy. Just imagine the amount of wealth which a CDSL/NSDL are going to create for themselves, right? And they are platforms. They have more. There is no competition. So every single transaction which happens, every single transaction that is routed through NSDL or CDSL. Okay, so let's bring in the heavyweight about the metrics of CDSL and NSDL. Demat accounts under NSDL around 3.3 crores, with CDSL around 10 crores. AUC almost 447 lakh crores. With CDSL, it's 134 lakh crores. Fiscal year 2023 profits 234 crores. For CDSL, 327 crores. Now, NSDL is meant for institutions and high value clients. CDSL for retail high volume clients. One handles the HNIs, the IPO kings. Other serves the retail in budget mix. But together, they own the entire stage. There is just no third player. Just two-man cage. That's your duopoly, and that's why it is a fortress. And that's why it has that moat and that competitive advantage. Because there's a high entry barrier. I mean, you cannot just wake up and think, okay, let me start a depository. You have so many regulations there are. And cash flows is protected. It's not wild, because every single time more and more companies come into, they have to pay that fees. Right? So it is protected. Annuity. Without them, no market settlement happens. Right? No market settlement happens. And low OPEX, low operating kharcha, high margin model. And with only two players, it's a game of trust, just not price wars. Well, what are the risks over here? We need to understand the risks. It's the SEBI which regulates the fee, and changes could become and impact the margins onwards also. Right? And there's also a risk with respect to the CDSL, we're having a growing preference for retail. And third one, it's an offer for sales. So whatever money is being put in, no new money is getting into the business. Still, this business has more moat than a medieval castle. When other runs IPO ads in Times Square, NSDL just quietly sits on 447 lakh crore. Imagine 447 lakh crores. Well, some IPOs bring its excitements, others bring FOMOs. But NSDL brings stability, steady compo. It's not a multi-bagger dream in disguise, but maybe the calmest corner in the market that flies. Should you invest? That's your call. But remember, if you're in the stock market, NSDL already works for you. This is just not a chance to own the back office. It's also, you can be a part of the growth trajectory or growth story of India, because as Modi ji says, mere 140 crore deshwasiyon, as of now, if that number is, as I said, 10, 11, 12 crores, right? So almost 8 to 9% of the people in India have Demat accounts. Let's talk of the matured markets. Let's talk of the US. US, around 55% of the people have investments in equities. In UK, around 32% of the people have investments in equity. In Australia, around 37% of the people have investments in equities. India, just realizing the importance of investments in equities. If that number of 8-9% becomes 15, 16, 17% over a period of time, remember, casino will always make money. Casino owner will always make money, irrespective of whether the people in that casino make money or not. Same analogy for a CDSL/NSDL. Rest, it's up to you to decide, and understand that this is an information from a knowledge perspective. No which ways it is any recommendation. Everybody is supposed to look into the risk factors while investing into these stock markets. So happy learning, stay tuned, and keep putting money in equities, and there is wealth waiting to be created in the long term.